Hello, everyone. My name's Nick, and I'm going to be doing a short session on savings for the next kind of 30 minutes or so. Just before I start, we're just going to wait for about 30 seconds or so, just to give people an opportunity just to log on. We do have quite a lot of people who have registered for the session today. My colleague Keenan's just going to put up a poll just while we're waiting. We just said that we'd kind of find out a little bit more about people's interest at this time. Obviously, I'm sure some of you heard the bad news about the Queen this evening. So, look, our thoughts are with her. But so, as I said, we'll just give it another 30 seconds or so. If people just want to put some comments on, just in relation to if you were to come into some money in the morning, what would you consider doing with it? The options there, as you can see, hopefully on the screen, are: would you put it into your pension? Would you use it to go on a holiday? Would you pay down your mortgage, or would you invest it? And look, I'll give people an opportunity just to fill in the questions, and I'll come back to the results towards the end. For those of you that have just logged on, my name is Nick Shaw-Lambert. I am the Managing Director of Alpha Wealth. Thank you for logging into the session. I'm conscious that some of you may be listening to this on playback, and I'm just going to spend the next 15 minutes or so just talking to you about a few, I suppose, things that I believe can help you in terms of saving money over the next 4 years in the most tax efficient and hassle-free manner possible. My colleague Clín O'Donoghue, who joins me on this call, and my colleague Keenan Cunningham have helped me put this together. And Clín is going to ask some questions that have come in over the last couple of weeks from some of you, and we will give you an opportunity to ask questions. Please feel free to put them into the chat after this session, during the session even, or indeed you can ask questions at the end if you'd like to. And of course, you can get in touch with us. You can email me, nick@alphawealth.ie, if you have any queries. So I'm just going to go through, guys, very quickly. Some of you may be familiar with Alpha Wealth. For those of you that are not, we're a Cork-centric company with 8 financial advisors, all of which are QFA qualified, working out of our Cork office. We have a small presence in Dublin, and we are providing independent financial advice to all types of individuals, whether you be PAYE, self-employed, or company owners. And your website, Alpha Wealth, is really useful in terms of some tools that you can look at. And I'm going to go through 1 or 2 of them with you, but it would be worthwhile, in my opinion, if you do get an opportunity, maybe after listening to this, just to look at our website and get a better feel for the company. There are some free, really good videos on that of some of the advisors within the firm that have given. So I'm going to go into the 4 takeaways that I want to run through with you today. Firstly, exactly what you need to do to save 30,000 euros in 4 years. The second thing is how to find the money to do it. There's no point me suggesting that people should do something and not giving them the tools that they need to try and do it effectively. And I'm going to go through this with you. I'm also going to talk briefly to high rate taxpayers who are listening to this call, or indeed maybe it's your partner or something you know, in relation to a specific tax back opportunity. And lastly, for any parents that are listening in on this call, how to build up education funds for your children, whether it be through 2nd level or indeed 3rd level education and beyond. So to get straight into it, I speak constantly to people about having a roadmap. And what I mean by that is you need to have a plan. So whether it's the case that you're saving for a mortgage, or if you're saving for your kids, or if you're saving for your retirement, you need to just set out a plan. Now, obviously, a lot of us are time poor. We're very busy in what we do in our day-to-day lives. And really, where we feel that we can help you in Alpha Wealth is helping you set out that roadmap. I'm going to talk a little bit later in terms of what Alpha Wealth can provide you, but it's really setting out these goals. So whether you're saving for 4 years, or whether you're saving for the next 15 years for your retirement or for your kids, it's just helping you plan effectively and checking in at least once a year on an independent basis and helping make sure that you're going to reach those goals. I'm 48 years of age. I have 4 children. I have planned effectively, I'd like to think, thus far, in terms of making sure that I have provisions made over the years. And more importantly, is as my financial situation has changed, I was divorced, I got remarried, I'm in a blended family situation, I've changed jobs, I've become a company owner, but I've always had a financial plan in terms of helping me effectively manage my finances. And that's the most important thing. So specifically, the first point I said is about helping you save 30,000 in 4 years. Now, very simply, it requires you to save 570 euros a month over the next 4 years if you're starting from a 0 point and earn 3.54% interest on that money. Alternatively, there are variations of this, of course. For example, if you have some money in the bank, let's say 8,000 as an example, the required amount to save per month is reduced to 400 euros. Now, you'll notice I'm using a very specific rate of interest. And the reason I'm doing that is because we feel very strongly that if anyone is saving over 4 years, they should earn more than 0%, which is what the banks, post office, and credit unions are paying us. And to highlight that point, if you do leave your money in the bank and try and save over the same period, instead of saving 570 euros a month, you would have to save 625 euros. So it's effectively another 45 euros per month, but 4 years to get to the same point. It's a really, really big thing. And more importantly is that the savings accounts that we will go through briefly in a moment, they can earn more than the 3.54. That, in my opinion, is a very conservative rate that we use. Most of these accounts typically generate between 5 and 6%. For anyone who is missed slightly what I said earlier, there is a poll which you can maybe answer if you get an opportunity to, that we're running during the course of this. And please do feel free to put any questions into the chat box. My colleague Cleaner, who's assisting me today, will be asking questions towards the end of this session. You can probably see at the end of the screen here other examples of how long it would take to save 30,000 over varying periods, depending on the amount that you can afford. Now, some of you might be looking at this saying, well, hang on, 570 euros a month is a lot of money to save. And what I'm going to go into now is how to actually go about doing that. But as I mentioned earlier about this roadmap, we will go through on a year-by-year basis how you're progressing, how the funds are working effectively for you, and making sure that you're really on target to get to that point and achieve your goals, whether it's 20,000, 30,000, 40,000 or whatever. The reason why that figure was used, by the way, is that tends to be the amount that most first-time buyers need for a house, obviously costing about 300,000 euros. It's also an amount if anyone wants to try and purchase a car outright, typically, or it's certainly a very good stab-in to get in a car. Or indeed, if you're looking to try and help your children into third level education, that tends to be the figure that normally would be required to help them through third level. So specifically, we recommend strongly that you do a financial budget. I say this again to every person that I come across, and I'm a financial planner for over 25 years now. It's something that I do religiously every year, where we can provide you a completely free budgeter. It's on our website if you'd like to look at it. Download it and use it. And it takes about 15 minutes or so. I advise people to do it with their online banking app open, or indeed a month's worth of bank statements. And it's a very simple thing to do, but it's really powerful. It's like anyone who is, say, studying for an exam, or, if you're looking to sort of get fitter or whatever, you need to focus and have a plan. It's the same with your finances as well. One of the main things, however, when it comes to saving is it's about trying to reframe your habits. And what I mean by that is that instead of you spending your money on your mortgage, your insurances, on your phone, on discretionary spending such as groceries and clothes and so on, it's about committing a certain amount to saving and then using the balance of monies then for everything else. And it's just a slightly different way of looking at this. But again, it's really important just to get it started. A lot of people get too, I suppose, emotional around saving. And what I say to them is that start early. It will reduce the pain that you'll endure if you don't start early. And this effect of compounding interest that I described earlier and the interest rates that we use, it's really powerful. Einstein called it the most powerful force in the universe, and it really is. And the key thing that we get clients to understand is that by doing this for a longer period than even 4 years, it will benefit you massively. So I want to just get into the specifics of how I can help you save money and how we work in Alpha Wealth. So the first example there is your mortgage. We are an independent broker in Alpha Wealth. We help all our clients who are looking to get a mortgage or who have a mortgage. And the main question I always ask my clients when I come across them is, are you paying more than 2.25% interest on your mortgage? Or is your mortgage fixed, and is it likely to come off a fixed rate within the next 2 years? And the main opportunity really is to ask them to contact their current bank and consider refixing at a lower rate over a longer period of time. It sounds very simple, and yes, it can be that straightforward. And specifically, normally when someone is fixed into a mortgage, there may be a cost involved in breaking that mortgage, but there typically sometimes isn't. And unless we find out the cost of breaking the mortgage, we cannot advise you effectively, but it doesn't always mean moving your mortgage to a different institution. In some cases, it may benefit you, particularly if you have an energy efficient home. So for example, if you have a BR cert, a B3 or higher. But again, the average saving that we've achieved for our clients is around 120 euros a month. In some cases, it's significantly more than that. But you should ask yourself this evening, if you have a mortgage, are you paying more than 2.25%? And if you are, I strongly believe that you should make contact with one of the advisors in Alpha Wealth, and we can certainly help you. The second area is for those of you that have a mortgage, you would have been forced to take out mortgage protection. I have been an advisor in the banks for many years. I know with, I suppose, good experience that we generally try to upsell mortgage protection to our clients. We were told to labor it with all bells and whistles and typically try to get as much premium from people as we could. My own personal view on it is that you should have a very basic mortgage protection policy, typically no more than 25 euros a month. So if anyone is paying more than that, again, I would ask you to make contact with us and let us show you how you can reduce the cost of your mortgage protection quite significantly. We would also discount plans as much as possible. Obviously, as an independent broker with the ability to do that, a lot of banks won't do so. Typically, the likes of Bank of Ireland, who are tied to New Ireland Assurance, and AIB, who are tied to Irish Life, generally don't discount their premiums at all. Home insurance is, again, another area where we can help people save significant amounts of money with no hassle. I should add, a lot of the things I'm going to talk about this evening really do not cause much hassle. Typically, we broker this for people. We do not provide house insurance directly. It's a very simple exercise. All we ask you to do is just provide us with your last renewal document. And again, on average, we're saving clients approximately about 20 euros a month on their plans for a like policy, by the way. Car insurance, similar situation. Loans, in terms of loans, if anyone does have any short-term debt, and by that I mean any car loans, any loans for finance, or indeed any credit cards, we help you navigate and reduce the debt on these loans. And typically through a lot of the savings that I've spoken about there earlier, and help you, I suppose, work on the most expensive loan first and reduce down the debt to a manageable level. I've come across instances where clients, who, for example, are saving for a house, have a loan, but then are leaving money in the bank at nil interest. And I try to explain to them about the effect of trying to clear down the loan early to save the interest costs, to give them in a better position then to save money more effectively. And it's just worth checking in with someone who can do this for you, again, hassle-free. Health insurance, for me, is a really big area. Anyone who is paying for health insurance directly, I do think there's a massive opportunity both to avail of online discounts, but also particularly for those of you that have children who are paying more for more than one child. I've never paid more for more than one child myself. You can navigate the insurance companies, and with a bit of knowledge, there are some good tools available like the HIA website. But check in with us. We can give you the guidance and advice. It is independent. We don't provide health insurance, but we can certainly get you to understand and see what savings you can make for the right type of policy. A lot of people, about 90% of people, have ineffective health insurance. It's not the right plan for them. They may not require the outpatient benefits, for example, claiming for things like GP, but they might be paying for them. Some other people have a preference towards things like physio cover, but their plan isn't adequate, and so on. So again, we can give you some guidance and advice, but most importantly, we can save you a significant amount of money, particularly if you have children. Pensions. Some of you may have a company pension scheme, some of you may have a private scheme, some of you may have pensions from previous employments. I would suggest that it would be worthwhile, if you haven't done so within the last 6 months, to just have a review of your pension. We've seen a lot of changes in the Irish marketplace. We've seen situations obviously of markets falling over the last 10 months due to various factors. We had a situation with clients who are inappropriately invested. A lot of people may have de-risked their pension and missed out on opportunity, and some people are too heavily exposed to risk. But the most important thing when it comes to pensions is make sure that you're not paying over the fees that you should be. Typically, a lot of clients that we come across are paying management charges of in excess of 1.5% to 2%, and they're not getting all of their money invested in the fund. So if you don't know what your fees are on your pension, please do, again, reach out to us. We are going to be doing webinars during the course of September. My colleague David Looney will be running one next Wednesday, the 14th of September at lunchtime, on how to get more from your money. It would be well worth, again, reaching out to us and registering for that event. And if you cannot make the event in person, we can always forward you on the video after the event. I'll be doing a further one on pension specifically and how much you should grow your pension to on the 27th of September, which is a Tuesday at 8 p.m. The final thing then is savings. Some people may have affected savings plans either through the banks or indeed through other institutions like the insurance companies. But through the interest and also through the reduced costs that we can provide, we believe that we can save clients on average about €80 a month. And if you total up all of those savings, that will amount to the €570 that I mentioned. And as I say, this is just based on some committed expenses. Some of the costs that we can help you with is shaving down even further in relation to kind of some of the discretionary spending and what we can help you reduce. I see there is a question which we will come to later on. If anyone does have any other questions that they want to ask, obviously feel free to put them in the chat. This slide I've just put up here, it may seem a bit dramatic to some of you. And again, I appreciate that everyone has their own, I suppose, unique circumstances. But one of the things to bear in mind, particularly in the climate that we find of, there is a lack of accommodation now. We're hearing and reading it all in the press. If you happen to be in a position where you have a spare bedroom in your house, you may or may not know, but you can rent a room and gain up to €14,000 a year tax-free. That's over €1,166 a month that you can get from renting your room, and you don't have to pay a sort of tax on that. So let's say, for example, that you could rent your room for €700 a month. And you might do it for a student who may not be there at weekends, who might only use it partly during the week. You may barely even see them. That would generate €30,000 tax-free over just 3 years. And that to me would certainly be an opportunity for some people, particularly if you happen to have obviously a little bit of extra room in your house. I'm just going to talk briefly in relation to how we operate. And this slide here talks about the Alpha Savings Challenge. We set up the Alpha Savings Club last year, and it proved very effective. What we were trying to do is encourage people to save €300 a month and save over 5 years. Now, these savings plans are very flexible. We provide an extra 1% bonus over every other financial broker. We cover the government levy for these schemes. And essentially, the key thing is that it's about them understanding the journey, helping them make this money work for them and getting interest for them. And if anyone is interested in that, as I say, please do contact us. So just in relation to what type of vehicles, and I've touched upon this, really there's two types of savings plans available. One of them is a liquid plan, which what I mean by that is that you can access the plan at any stage. We generally recommend a minimum of 3 years. And then there are other plans that are more fixed in their duration. So they tend to be kind of 4 or 5 years centric. Typically with these plans, and I'm going to talk about the liquid one first, the growth rate that we would anticipate that you would make on these is about 5% per annum. There are no exit penalties. As I mentioned earlier, we keep our fees very low. We ensure that you get all of the money allocated, so there's no entry cost, and the only fee is the management fee that's paid to the insurance provider. The example here is through Zurich. We believe that they have the best savings account. And if anyone would like some more information, then please do get on to me. Some people may have this account already that maybe listen to this call, and it has stood the test of time. The average return on this account, despite the recent trolls that we've seen, has averaged 6.6% net of fees over the last 3 years. And hence why we express, to people that you really do need to give these things a bit of time to work and to earn interest for you. The second type of savings account is a taxback scheme. Now, it's basically a 4 to 5 year investment through the government called the Employment Investment Incentive Scheme. And this is really a scenario where you basically are giving money to one of the 60 to 70 Irish companies that look for this type of money each year and get a rubber stamp from revenue, where the example of, say, 10,000 euros, if you happen to have that in the bank, and if you are prepared to invest for up to 5 years, that the Irish government will give you back 4,000 euros within 6 months of you making that investment. And at the end of the 4 to 5 year period, you will get your 10,000 euros back plus interest, typically which would amount to about 20%, or on the example I've given, about 12,000 euros net of tax and any fees. Now, you might say, well, this sounds a little bit too good to be true. It's a net investment of 6,000, obviously 10 minus the 4 from the government, and then you get back 12. With this scheme, basically the risk is the money that you invest in that company, that the company is in a position in 4 to 5 years' time to actually pay you back. There are some very good companies in this space. We have selected 4 companies of the universe of 60 to 70, and we have a lot of experience. We provide information to you. We explain them. They vary from whiskey companies to IT companies to renewable energy companies. And the key thing is that we are independent in our advice to you. And our role is to basically educate you. Pascal Donoghue said in the budget last year that the scheme was going to exist for a further 2 years beyond this year. It may or may not go on beyond, depending on what happens to the government and their views, but it is an opportunity for this year. And if anyone is in a position between now and the end of the year, again, we'd be more than happy to go through the nuances of that and give you some more guidance. Finally, I'm just going to talk about child savings. I've alluded to this earlier in relation to kind of saving. And it's really, again, through Zurich, I have a really, really attractive savings plan. I have it for my own children. And I would strongly recommend it to anyone who does have children, particularly who are, pre-teen. So anyone who's kind of kids of, 12 or younger, it lends itself really well to that kind of 3, 4, 5 year time frame of building money and getting your money working harder for you. And certainly the returns would be significantly more over that time frame than leaving them in the bank. So in summary, I'm just going to mention, please do look at our website. There's some really good tools, including the budget calculator that I mentioned earlier, and do link in with us. If you have a financial advisor, get advice from them. We're happy to kind of talk to you. There's no obligation to take the advice that we give, but we do feel strongly that certainly in this difficult environment, and we accept that, there's lots of challenges for people's money with rising energy costs. Obviously, there's concerns and so on. Do make sure that you get your money working for you. The examples I've given you are very real. We'd like to think that we can absolutely help people in terms of saving the money. And as I say, please do make sure that you do take advantage of it. Just before I pass on to Cliona, I'm just going to mention in relation to the results of the poll. It seems that the most significant one is that people, if they were to receive 10,000 in the morning, would invest it, which looks great. I suppose probably taking advantage of what I've said this evening. So thank you for conducting that. So Cliona, I'd like to maybe bring you in at this point, if that's okay.
Perfect. Yeah, thanks, Nick. I'll start with some of the questions that have come into the Q&A section. So what is your advice on routinely changing utilities provider? So electricity, phone, broadband, gas, etc. Any pitfalls to watch out for?
Yeah, it's a really good question. So I always say to people, it is absolutely worthwhile making sure that you do review what plans you have. And the thing is, these utility providers basically take advantage of the fact that people sometimes don't have the time to do so. So generally, it is certainly worthwhile every time that you get, a renewal, or indeed if you see a statement, check with the provider, check with a financial advisor. We're happy to help you and assist you in relation to making sure that you're not overspending and to get guidance. In terms of what pitfalls to look out for, you should look at the terms and conditions, just make sure and you ask the appropriate questions. But generally speaking, typically, like for example, I'm with Board Gosh, I got an offer for both gas and electricity, which is coming up for renewal. I've diarised it actually for December. I have diary notes to make sure that I remind myself that I am going to shop around at that point, because especially with rising costs, it is absolutely critical that people do that.
Are you solely working through Zurich for liquid option?
No. People sometimes accuse me of being kind of obsessed with Zurich. I am only interested in my clients and making the most money for them. And Zurich's savings plan is the best in the market. I absolutely go on record to say that. I can prove it to you. If I had more time, I would show you a comparison between Zurich and other providers, and they offer the lowest fees. Online access, so you can view your savings at any stage. We are very active with them, and they're a really good company to deal with.
Okay, on the budget calculator via the website, the income source, is it gross or net?
You should use your net figure for that. What we're trying to work out is how much money do you physically get into the bank and how that money is spent. If anyone would like to kind of have I suppose, a check on what tax they're paying and whether they're overpaying tax, we can assist them. There are some good sites as well. There's a site through Deloitte that's really useful, just ensuring that you're not paying too much in tax. But the short answer to the question is net income.
Thanks. I realise it's hard to predict what future government policies will change, but is there any likelihood of pension rules or allowances changing in the next 4 years?
There is a possibility that the government might restrict the maximum amount that people can have in their pension funds. The current threshold limit is 2.15 million, which might seem like a really large figure, but certainly for some people, particularly some business owners and some people who are very well paid, that limit, and it has been reduced quite significantly in the UK, and we tend to follow what the UK do, has been reduced down to 1 million. So I think in that instance, if anyone does have a very large pension fund, and again, I will be talking about this more on the 27th of September, if anyone would like to listen in, it's important just to kind of be mindful of, where you are in terms of that pension cycle. But in general, no, apart from the fact that the government have said that they will enforce employers who are not contributing to a pension scheme for their employees, that they will start doing so within the next 3 years.
With a global recession being predicted, do you think there is a higher risk in entrusting our savings with a fund?
No, I don't. And the reason I say that is because markets are forward looking, and the price of these funds has taken countenance of everything that we know today. The fear of recession, rising interest rates, all other factors that are going on in the world, rising energy prices. And the point is that markets tend to overreact. So arguably the fall that we've witnessed over the last 10 months is because of the doom and gloom, and I suppose the fear that we're currently witnessing. Now, I don't like saying to people that you should try and time the market, but certainly getting into funds now is more attractive than it was 10 months ago. But the key thing, as I say, the only things you can control are how much you put into a fund, what your fees are, and you need to make sure you keep these at a minimum, and where you're invested in terms of the risk profile. And having a diversified approach is really important. I come across clients who have a large exposure to cryptocurrencies, which doesn't make sense, or have a large exposure to property. And my role is to try and help them ensure that they do have a good mix of different assets and that they're not overly exposed. But the most important thing is give it time. The thing I say to people whenever they want to save money or invest is you invest as early as you can, you leave it for as long as you can, and that you hope the period in between is long enough to enable you to get through these cycles. And that period typically tends to be 4 years or longer.
So that's moving on to the next question, which is, for a 4-year plan, what level of risk would you recommend? Matrix, Prisma 5, etc.
Okay, so in relation to funds and forms for 4 years, which tends to be on the kind of the low side of the sort of time scale, I would certainly recommend that you go into a medium risk level. Now, to just explain risk very quickly, risk goes on a scale of 1 to 7, 1 being cash, 7 being high risk. And for me, anyone who is saving for 4 to 5 years, I would recommend that you'd be dead in the middle around a risk level 4, where you're looking at returns of about 5 to 6% per annum, but knowing that you could lose 5% in any given year. But the probability over the 4 years is much greater that you would make a much more positive return than you would make a negative one. 2 to 3 years is just too short. 4 years is absolutely bang on.
So for pensions, what is the max tax benefit you get for someone in their early 30s, example, 20% of gross income?
I suppose the question seems to have been answered, but for anyone who is in their 30s, you can put up to 20% of your earnings into a pension scheme, and that's your contribution. So if you're working for a company, let's say you're working for Pfizer or any of the big companies out there, they may be making a contribution of 5, 6, 7, 8% of your salary, but in your 30s, you can still contribute a full 20% of that. People who have excess money, I absolutely encourage you to look at your pension scheme and look at whether or not you're funding that appropriately, because pensions are a really effective tax vehicle. You know, if you think about it, if you're earning over 37,000 a year, you put 100 euros a month into your pension fund, the government are going to give you back 40 euros every month. That's a 66% gain the minute you do it. It's phenomenal. And people can access pensions from 50 years of age. So it doesn't mean that you have to wait until you're 65 or even close to your 70s. But again, today's discussion was more around savings. Pensions is for the 27th of September, but I would encourage you to consider pensions for sure. But I hope I answered the question.
What about Zurich Dynamic?
The Dynamic fund is fine. It's generally a little bit higher risk than the medium risk fund that I referred to. So it tends to be kind of centered around the risk level 5 and 6. But as part of the portfolio, I have no issue to. But again, it depends on the amount involved. So if anyone is saving 1,000 euros a month, for example, I wouldn't put it all into the Dynamic, for example. But again, it's proportionate to what you have and to how much funds that you've built up.
The next question kind of goes back to your previous one, in that this says, I have a lump sum. Would it be best to invest it, pay off my mortgage, or invest it in a pension?
It depends on the circumstances, but I would suggest that you might consider all three and maybe take a blended approach. So some people, you know, if you are paying a mortgage, as I said earlier, of less than 2.25%, which you should be, there is no real massive requirement, in my opinion, if you have a sum of money to pay back the mortgage, if you haven't sufficiently funded your pension, because of the fact that you get such great tax breaks with the pension scheme. However, psychologically, some people prefer to have less debt. And what I say to them in that instance is, you might find it easier for you, just from a peace of mind point of view, to just pay off some of the mortgage, but also consider putting some of that money into the pension scheme. But I always refer to this kind of short, medium, long term. Short is anything less than 4 years. Medium is 4 to sort of 15, 20 years. And long is kind of 15, 20 years upwards, depending on your age, of course. But taking someone, let's say, who's in their kind of 30s to 40s. And it depends on how you're sufficiently funded. And all you do is you make sure that you have different pots and you dial up and down depending on your situation. So for anyone who is saving for a mortgage, their focus is going to be more on shorter term savings. If they're looking to buy a property in the next 2 to 4 years, for example, than someone who, for example, has a mortgage, is on a low rate, and is maybe looking at trying to build up their pension savings because they may have underfunded for years. So it does depend, but as I say, I wouldn't rule out any of those, and I'd rather have a conversation with them and discuss the merits and obviously of each.
I am currently 23, earning 28k. How much do you think is a realistic amount to save each month, considering rent at the moment in Dublin, paying 650 a month?
I think the financial calculator will be very useful in this instance. And again, we can assist you with that if you want to use it and maybe forward it on to us. But in terms of the answer to the question, 10% of your gross earnings is the figure that I suggest that you do. So for example, given I think 28,000 was the earnings level, 2,800 a year would be the sort of the type of figure that you should look to aim for, which is about 220 odd euros a month. Now, again, I appreciate, paying rents, particularly in Dublin, it's very expensive, but you need to go back to what I was saying earlier about how can you reduce costs? Can you reduce the cost of your car insurance? Can you reduce the cost of your day-to-day expenses? And it's really about trying to focus on what's important, and it's reframing that I spoke about earlier.
Are you happy to take one or two more questions?
Yeah, absolutely. People are happy to stay on and listen.
I have some shares, and should I keep hold of them, or given the volatility in the market at the moment, should I consider selling them?
Shares are risky investments. A lot of people accumulate shares for the companies they work with, and I say to them all the time, it's a really good idea to try and sell your shares occasionally when they vest. It's never a good idea to hold too many shares in any one company. I suppose because of the way the world is at the moment, which is termed volatility, it's this kind of up and down movement, they have become even riskier. So people who say invested in shares from, say, the last crash back in 2008, 2009, up to November of last year, generally would have made money. The market generally went upward. We've seen a very different scenario for the last 10 months. So the short answer to the question is, I would review your risk. I would consider trying to be more diversified and look at other asset classes. And yes, the Zurich savings account for me, even with the amount of experience and knowledge that I have, makes a hell of a lot of sense, because you don't have the time to manage these things on an hour by hour basis. Don't mind a day by day basis. And you want to leave it to the experts who know what they're doing and make sure that they're picking the right instruments and making that growth for you.
So the next question, I have a Zurich savings plan, saving 140 per month, but can afford to increase it by 100. Is it better to increase or save the money elsewhere, given kind of the comment about diversification and all that?
Those accounts are really diversified. So I would recommend that you would put it all into the same fund, especially at the low fee basis that I spoke about earlier. And it's really about giving it time. I think sometimes we can get a little bit, maybe, I suppose, too discursive about what we try and save into. The amount of inquiries that I had for people who wanted to invest in cryptocurrencies up until about March of this year, and obviously subsequent to the fact that they've been falling so significantly, people have kind of gone back to, but just think about the vehicle. Like, if you're putting money into a pension fund, you're getting that 40% immediately. It takes a lot of the pain of risk away. If you're saving into a Zurich fund, and if you're saving over 4 years, 5 years plus, again, it takes the risk away because of the longevity of that. Try not to speculate. I say to people, like, are you an investor or are you a speculator? People who buy something to try and make money over the next 12 to 24 months, that's what they're doing. They're just speculating.
And I think we'll finish up with this question, which is, what are your fees, percentage or yearly fixed?
The fees, typically, we offer clients on the Zurich savings account on a monthly basis. The only fee is a management charge of 1.6% a year. We cover the government levy, and we also provide 100% allocation. There's no entry or exit fee. Now, given the returns are in the region of about 6 to 7% per annum, the 1.6% brings that back, and that's why I typically use a figure of 5% per year for a medium risk fund.
Sorry, Nick, there's another question has come in, so we will address this as well, if that's okay. Apart from the cash reception gift for children, have I any other options of giving my young kids money, ages approximately 10?
Okay, so it's an interesting question. Very briefly, and again, if you'd like to kind of message me directly and I can answer your questions, we are providing a full review for clients, and we're happy to review any arrangements anyone has. We'll give you a financial roadmap. We'll budget for you. We'll plan your savings and your pension funds, provide independent projections. We're charging 99 euros plus VAT, which is 121 euros 77 for that service. And if anyone would like to avail of that, please do email me. We'll send you on the video after this call. But to answer that particular question, it's that you can give your children 6,000 per couple or 3,000 from an individual per year. It's called the small gift exemption. However, you can gift, or your children can inherit, up to 325,000 euros over their lifetime. And there are one or two other options, which again, I can run through perhaps with you directly if anyone would like to maybe get in touch with me around how you can give your money. But effectively, the short answer to that is if you have a child who's age 10, you can give them over your lifetime and on your demise up to 325,000, but you can also give them 3,000 from you. And if you're in a sort of joint scenario, 6,000 in total. And when they have a partner themselves, you can give their partner 3,000. And when they have kids, you can give their kids 3,000. So you can give your kids a lot of money over a long period of time and avoid tax completely.
So that's the end of the questions. I think one attendee, though, has their hand raised. I don't know if that's in error, or would they like to ask a question? No, I think the hand has gone down, so that must have been an error. So I think that's with all the questions. Yeah, that's it in terms of the questions, Nick.
Okay, I just want to say thank you again for your attendance. Thank you for all the questions. For anyone who is listening on playback and maybe have a question perhaps that wasn't asked, I'm more than happy to answer any questions. There is no fee for anyone who wants to just message me. My email address is nick@alphawealth.ie. But as I said, we are trying to reach out. We will be doing more webinars, and please do listen in to David's webinar next Wednesday lunchtime at 1 p.m. We will send on the details of that to anyone who has registered for this evening. It is how to get more from your money. It's a really worthwhile 30 minutes.